Hello investors. The IT and BPM sector has become one of the most significant growth catalysts for the Indian economy, contributing significantly to the country's GDP. The IT industry accounted for 7.4% of India's gross domestic product (GDP) in the financial year 2022 and is expected to contribute 10% by 2025. The export of IT services has been the major contributor, accounting for more than 53% of total IT exports including hardware. Infosys and Tata Consultancy Services are the major players in this rapidly growing industry. Welcome to our channel. I am Infographics. We simplify complex data and trends with engaging infographics and visual explanations. From market analysis to the latest in technology, our channel makes information clear, understandable, and enjoyable through graphic design. Today, we bring you an insightful comparison between two IT powerhouses, Tata Consultancy Services and Infosys. This video dives into their fundamentals, technicals, shareholding patterns, and other key metrics to help you make informed investment decisions. Let's get started. Segment 1, Overview of the companies. TCS, a part of the Tata Group, is India's largest IT services provider by market capitalization. Infosys, on the other hand, is known for its innovation and client-centric approach, ranking second in market cap. Both companies operate globally, offering services like cloud computing, AI, and digital transformation. The key business verticals for Infosys are the same as TCS, barring life sciences and healthcare. Infosys instead has an energy, utilities and resources division. Segment 2, Fundamentals Comparison. Market capitalization. TCS leads with 12.5 lakh crore rupees, while Infosys follows at 6.9 lakh crore rupees. Revenue 2024, TCS clocks 2.25 lakh crore rupees compared to Infosys at 1.6 lakh crore rupees. Net profit margins, TCS stands at 20.76%, slightly higher than Infosys at 18.39%. Return on equity, ROE, Infosys delivers 30.6%, while TCS is close at 29.7%. This shows that while TCS is larger, Infosys holds its ground with excellent efficiency ratios. Revenue and profitability. TCS reported consolidated revenue of 60,583 crore rupees in Q3 financial year 2024, with a 4% year-on-year growth. Infosys, meanwhile, recorded 38,821 crore rupees in revenue, showing a modest 1.3% year-on-year growth. In profitability, TCS outshines with a 24.1% operating margin compared to Infosys' 21.1%. Valuation metrics. TCS trades at a price-to-earnings ratio of 27.87 and a price-to-book value of 13.07. Infosys, being relatively cheaper, has a PE of 22.29 and PB value of 7.19. Revenue growth CAGR. In the last 5 years, revenue of TCS and Infosys grew at CAGR of 8.9% and 11.1% respectively. Though Infosys has a higher CAGR, TCS is leading in terms of revenue. The revenue of TCS is 1.5 times that of Infosys. TCS revenue growth was aided by manufacturing, life sciences and healthcare and energy resources division. On the other hand, Infosys revenue growth was aided by manufacturing, high-tech and communications divisions. Segment 3, Technical Analysis. Stock price. TCS is trading near 4,039 rupees, while Infosys is around 1,824 rupees. 1-year return, TCS has delivered a return of 15%, outperforming Infosys, which returned 8%. PE ratios, TCS trades at a higher pay of 29, indicating a premium valuation, while Infosys is slightly more attractive at 26. While TCS is favored for stability, Infosys looks appealing for value-focused investors. Higher margins backed by lower expenses. Both TCS and Infosys have healthy operating profit margins as they have kept their expenses low. The 5-year average operating profit margin for TCS and Infosys stand at 26.7% and 24.5% respectively. As we can see, TCS is leading in this category. With respect to the bottom line, TCS and Infosys net profits have grown at a CAGR of 7.3% and 9.5% respectively in the last 5 years. However, in terms of net profit margins, TCS seems to outperform Infosys with a 5-year net profit margin of 19.7% and 17.9% respectively. Employee metrics. In the IT sector, employees are the most valuable assets as it is a service-driven business. Companies have to continuously invest in acquiring and keeping good talent to ensure companies' growth. Therefore, IT companies have to roll out higher bonuses than the traditional businesses to retain talent. In the services sector where human talent is the key to success for any company, employee attrition rate is the most important metric to track. This year, IT companies witnessed a sharp decline in employee turnover across the industry. The attrition rate for TCS stood at 12.5% during the financial year 2024 compared to that of Infosys, which stood at 12.6%. A sharp decline in employee attrition rate for both these companies may give a positive impact on the margins as companies do not need to pay more to retain employees. Therefore, despite muted sales growth, there has been some margin improvement for both these companies. Segment 4, Shareholding Pattern. Promoters, TCS has 72% promoter holding, being part of the Tata Group, while Infosys has no promoter holding, with shares entirely held by institutions and the public. FIIs, Infosys sees stronger foreign institutional investor interest at 35%, compared to TCS at 15%. Retail investors, TCS has a higher retail holding of 6%, while Infosys is at 3%. This indicates Infosys is heavily institution-driven, while TCS has a more balanced investor base. Segment 5, Dividend Payout and Returns. Dividend yield, TCS shines with 3.34% compared to Infosys at 2.72%. Payout ratio, TCS distributes 45% of its earnings as dividends, while Infosys follows with 40%. TCS emerges as a better choice for consistent income. A company generally carries out a buyback if it feels the share price is undervalued. When it buys back its shares, the earnings per share rises. As a result, the price-to-earnings ratio falls, making it an attractive investment. A company distributes its profits to its shareholders in the form of dividends. Dividends can be in the form of cash or stock. Segment 6, Future Outlook and Opportunities. Both companies are poised to benefit from the ongoing global adoption of technologies like AI, IoT, and 5G. While TCS is focusing on end-to-end digital solutions, Infosys is strategically building resilience and sustainability in its services. Analysts believe both are excellent long-term bets for investors. Both companies are heavily investing in cutting-edge technologies like AI and blockchain. TCS leverages its Ignio platform for autonomous enterprise solutions. Infosys focuses on its Cobalt platform for cloud-based innovations. While both are innovative, Infosys' focus on cloud services gives it an edge in the digital transformation space. Segment 7. Risks and Challenges. Both companies face similar challenges, including global IT spending cuts, a potential slowdown in IT budgets across the US and Europe. Attrition, high employee turnover remains a concern. Currency fluctuations, as export-driven businesses, they are vulnerable to forex changes. Investors should weigh these risks before making a decision, including dependency on the US and European markets and a potential slowdown in IT spending globally. Additionally, increasing competition from smaller players in niche areas like AI could be a challenge. Conclusion, the verdict. Both TCS and Infosys are exceptional stocks with unique strengths. Which stock should you choose? So, which is better? Choose TCS if you prefer stability, strong dividend payouts, and a market leader. Choose Infosys if you are looking for slightly higher growth and better valuation. Remember, both are stellar long-term picks in the IT sector. It ultimately depends on your investment goals. Diversifying across both could also be a prudent strategy. Which stock do you prefer? Let us know in the comments below. Anybody can invest journey. Before we wrap up, don't forget that this video is part of our ABC Invest Anybody Can Invest journey, a series dedicated to helping anyone from anywhere can understand and begin investing in the stock market. If you are new here, check out our previous episodes to start your investment journey step by step. ABC Invest Journey episodes, as we simplify investing concepts for everyone, and investing isn't just for experts, it's for anybody who wants to take control of their future. That's all for today, investors. Thank you for joining us in this analysis. Let's continue to learn, invest, and grow together. See you in the next episode. Stay tuned and remember, anybody can invest. Happy investing!